If you're building a rental property, ground up construction, using a hard money loan, there's a good chance you're gonna overpay in fees, closing costs by $20,000 to $30,000. There's a solution you probably didn't know existed. Let me explain. The standard playbook is to take out a hard money loan, go under contract for a property, close, build the property. Once the construction is fully complete, refinance out into a conventional loan or into a 30-year fixed DSCR loan. It sounds simple enough, but here's what that actually cost you. So just to buy that property, you're probably looking at around 2 to 3% in origination fees at discount points, not to mention just the standard closing costs to buy that property. Once that property is complete, you refinance out either into conventional or back into a DSCR loan, and you're gonna pay nearly identical closing costs. You're still gonna look at probably roughly 2 to 3% in origination fees, in addition to all those title and escrow fees that you already paid on the purchase side. This isn't even mentioning the higher interest rates that hard money loan costs, typically in the 9 to 12% range. So on an average purchase price of, let's say, a $500,000 purchase, you're looking at roughly 10 to 15 grand in fees just to buy that property, and another 10 to 15 grand just to get out of that hard money loan into a new 30-year fixed program. So this program, it allows you to pretty much cut that number in half. So you're gonna cut the closing costs in half, in addition to getting a much lower interest rate that's closer towards a 30-year fixed, not a hard money loan. The solution here is a one-time close DSCR loan. So the name pretty much tells the story here. Everything is bundled into one loan. The construction and then the loan modification after the construction is fully complete. So you're gonna pick out a property, you're gonna close like a normal escrow. As soon as that loan closes, there's gonna be a series of draws that go out to your builder or to your general contractor, typically up to 10 draws. Once the project is fully complete, that loan's gonna modify from a construction loan directly into a 30-year fixed DSCR loan. The best part with DSCR, you're probably already somewhat familiar, there's not gonna be any personal income evaluation, no tax returns, pay stubs. The lender's only looking at the gross rents of what that property would rent for, of course, after it's fully complete, comparing that to your PI/TI mortgage payment. So ideally looking for a 1.15 DSCR ratio. Again, it's a one-time close, so the rents are gonna be based off of what the property would be once everything is fully complete. With this property, you can actually qualify using either short-term rents or long-term rents. I just helped a buyer up in Sedona, Arizona. The short-term rents in that market are nearly twice as high as it would be as a long-term rental because it's a vacation town. So the DSCR ratio isn't really gonna be an issue in most cases because you're gonna, of course, appraise that property once everything is all 100% set. So the appraiser is really just gonna appraise the actual plans and specs of what that property would rent for and what it would sell for potentially on the market. So they're gonna perform a 1007 rent schedule to come up with that rental analysis. That's gonna dictate the DSCR ratio. If you were to purchase the land, you can of course add that to the new purchase price, which would be the full rehab plus the cost of that land. Or if you already own the land outright, you can use that equity you have to cover the full down payment. So if you have, let's say, 25% equity, you can use 100% of that land value if you've owned that land for at least 6 months. I just helped an investor here in Arizona. He didn't pay a single dollar after all the closing costs, down payment was fully covered by the equity that he had in that land. He just came out of pocket for an appraisal. Everything else was fully covered. So bottom line here, you're gonna have one much lower interest rate as opposed to a hard money loan. You're gonna have one set of closing costs as opposed to that second set with a hard money loan and your exit strategy. It's gonna be one-time close. It's very simple, much easier to get approved. You don't have to have the anxiety of qualifying for that DSCR or conventional, knowing as soon as you close on this loan, you're gonna be fully good to go. This program isn't really geared for first-time home buyers. It's geared for experienced investors. You do have to have at least some sort of rental management experience over the past 36 months to get approved, ideally above a 720 credit score. For down payment, we're typically looking at 25% down. Again, if you already own the land, that can completely cover the full down payment requirement. Terms can vary a little bit depending on credit score. I know the clients I've seen with this program mentioned that it's pretty comparable to an average DSCR loan interest rate without any other hidden fees that could come up like a hard money loan. Any questions you guys have, please drop me a comment, shoot me a message. Again, my name is Austin Clarence. I'm your DSCR loan expert.